So please, I would like to welcome the panelists on stage. The arrangement is not random. It is made in the logic of the title, from pit to bit and everything that is in between. I would like to welcome Sean Boyd to the stage, the old world, which is tangible, and proven, which is gold. Please welcome Sean from Toronto. Maybe here. Yes, we have, you can take a seat. That's what I have to say. We have providing financial stability, which enables us to transact across the world, requires an enormous complex web between different regulations and laws. It is the most complex arrangements which we have to regulate, coordinate, and also to regulate and coordinate financial markets. It's called financial or capital global governance. And we're very privileged to have Ugo Panizza, an economist from the Graduate Institute, one of the prime providers of research and know-how and executives to the World Institute of Bank International Settlements, World Bank, IMF. Please welcome Ugo. Next to Boyd. Now, the world wouldn't work if we could not convert the tangible into the intangible, which would make the whole machinery work. The capital flow, the economies prosper. And it is the banks which address, as much as we might not like them, as much we rely on them, we will figure it out whether they will still exist in the future. Stephan Murer, former CTO of UBS, and currently our level above that. Please welcome Stephan. Now we're talking about the global regulation in terms of coordination, global governance. Nothing would work if the contracts and the rule of law would be defunct and would lead to a situation of decay and distrust. So it is the law and the different laws which work together harmoniously across the world to make the world go round. And this requires very sophisticated arrangement from the legal side across different jurisdictions and rules and regulations. Matthew is highly engaged across the world to find ways that we can work together also with the new technologies. Please welcome Matthew from New York. So now comes the cool guy. Now comes the cool world. Every single booth around here is some blockchain this, blockchain that, cyber this, cyber that. Well, we decided to represent this. We take the chairman of the 9th largest cyber currency foundation called Cardano, which is, by the way, is also a sponsor. This is not a sales presentation, so I will not push one or the other. The panel is to decide what will define the future. Please welcome the chairman of Cardano Foundation, Nathan, all the way from China and Taiwan, and Boston now. So they came from, maybe sit one more here, because there's the, maybe if you move one, because otherwise people don't sit, just move all across. Sorry. Yeah. So we need to see the gold, even though I know it's from the Puteos, from a black hole, and you make it shine, but everybody should shine with you. Now I'd like to share a little introduction of each individual, because there is a funny story behind each one of those. I start with Sean Boyd. In 2004, I got a phone call from a friend in Toronto, a small-scale broker. He raises small capital for small companies called Chase in Monaco. He said, Kaspar, can you meet a friend of mine in Zurich called Sean? I said, of course, it's your friend. So we're going to meet. I said, what does your friend do? He said, well, he's in gold mining. I said, okay. I have no clue about gold. I have no clue about mining. He said, but I'm going to meet him anyway. So he arrives. He sits there all alone in the hotel lobby. And we got introduced. And he said, John, I'm sorry. Jason told me doing gold and mine. I have no clue about it. But if you become my mentor, I would be very interested to learn more. And John became the one who opened the door for me into the world of commodities, mining and engineering and all these things. We became very close friends. Now, the John was raising money at the time is little, 2 million, 3 million, something like this at the very beginning. He came home. He was in battle from Liberia, civil war. He had enough of mining in Africa and all these countries. He said he wants peace and stability. He goes to Canada, has no money. Friends gave him a little money to buy a car. Then he goes to the Central Library of Quebec, I think, to sort out where can I find a little asset to look for gold. And he found this thing called Malartic area. And he got the license for, how much was it at the time? 100,000? $88,000 he paid, okay, for that license. And he started to raise money. Nobody knew him, I mean, outside of the world. And we became friends. Okay, a little bit forward. Malartic is 500 kilometers north of Montreal, right? Please come in. Please come. They're too shy. They're just running away. Anyway, so now 2004, 10 years later, Malartic is the largest producing gold mine in Canada. Jean Rosen or Cisco Gold became so successful that it attracted a lot of attention and interest from other companies, a hostile takeover. Well, they didn't want to let go of Cisco. It was a gold proposition. So Sean said, listen, let's do a deal. I, together with Yamana, will buy your company for 4 billion Canadian dollars, around 3.9, in 2014, and I give you royalties, and you keep on digging for that gold. And he said, that's fine. So they bought the gold company, Agnico Eagle 2014, and today the two Seans continue their success together. He gives them royalties, the other one provides new assets, together by holding each other's hands, the golden hands. By the way, Sean tried also to come, but he had other obligations today. Well, that is the little story which connects the two Seans with me. Then Ugo Panizza, professor in Graduate Institute, and I'm not very smart to be, I'm not an economist, but I had an idea, how can we make better the lenders and borrower access with commodity exporting countries without exposing themselves always in this massive volatility in collateral and liquidity provision. That is a kind of interesting, and we went to the Bank of International Settlement, Financial Stability Board, and so on, and they thought this really interesting. But then in the meantime, I had some other interest, but that brought us together. So finding ways to harmonize better lending and borrowers with emerging markets. And we're very happy to have here Ugo. Then Stephan, well, the same thing. The cyber something came up, digital. I had no clue. When I have no clue, I try to find the ones who know a lot more than I do. And I tried to find some mentors, and I found one in Dr Kaspar, ETH professor, who introduced me to Stephan to learn more about financial technologies. In the meantime, Donald is in the clouds in Microsoft in Seattle, while Stephan stayed here because he doesn't like Silicon Valley so much. So you take the Silicon to our Zurich Valley, which I think is much better. Then Matthew, another funny story. Another friend calls me, hey, can you meet a friend of my two friends? Matthew's coming with Stan, whatever. Okay, no problem. So we go have a dinner together in the Apfelkammer. The ones from Zurich know what the Apfelkammer is. It's the smallest restaurant, the funniest one, and you have to climb over a wooden beam, and then you have to get drunk upside down. That's the Apfelkammer. Well, I couldn't climb up there. I think you achieved to do it. And Stan is now 76. He tried, and he did the best of all. Now, Stan is very interesting. On the way out, Matthew told me, hey, that's the guy who discovered deep throat. What is a deep throat to do in the Apfelkammer in Zurich at midnight, basically? I said, what do you mean deep throat? Well, the one of Nixon. He discovered it? Yes, he did all the hearing under the Nixon regime, and he discovered that Mark Felt was on the trial, basically. The hearing was deep throat, but it was outside of context, and he kept the secret until the death, right, of Mark Felt, I think, when he disclosed it. So much about this discretion. So that led to a friendship with Matthew. Now, Nathan, that's the funny thing. Now, he comes from the world of cryptos, the world of mystery. For years, I heard this Nathan guy in Asia. I had no clue. I mean, Andre Gilde, Corrado in Taiwan, everybody said, you have to meet this Nathan. I said, okay, whatever, this Nathan. So eventually, I was working on doing an entire series of One Belt, One Road in China. And so I reached out through you, through Good, but you would be interested to write something. He said, yeah, but you have to pay me. I said, I'm not going to pay you. And so it fell apart. And I called Corrado, listen, did you talk to Nathan? I said, sure, but he wants to be paid. I said, I'm going to pay. And Corrado said, what? He wants to be paid for this little publication? Yeah. Now let me talk to him. So he came back. Well, what do you do when you ask something and you have to pay? You turn this thing around. Now he pays me that I am here with you. Thank you very much. So he represents basically the sponsorship. So thank you very much all for coming. An applause to the entire panel. So let's start the panel now. I would like to ask each panelist going from left to right to quickly introduce yourself and what you do. Please, Sean. Oh, now we need the microphone.
I'm Sean Boyd. I'm the CEO of Agnico Eagle Mines Limited. As far as gold mining, we've been in business for 61 years. Our production is still growing in an industry that's not growing. And I think it's a testament to the company that our focus has remained in Canada, and we're seeing a lot of M&A. But I just wanted to comment on the title, Pit to Bit. Bit is not 01. Bit is the drill bit. The drill bit was here way before 01. And without the drill bit, we don't get the pit. And I would also like to take credit for hip. You know, you can say that gold isn't hip, but there are times when the core of our investor base have just had a hip replacement or are in line for a hip replacement. So we're going to take credit for all that headline and title.
That's fantastic.
Okay, Ugo Panizza. I'm a professor of economics. I also have some other hats. I direct a center which is called the International Center for Monetary and Banking Studies, where we convene, central bankers and Minister of Finance. We had last week the governor of the Central Bank of Brazil. So bits, my first job was to sell hardware. So I sold a lot of bits. They want to make calls. And hips, I didn't injure my hip, but I did my knee, so.
All the way down from the hip. Stephan.
My name is Stephan Murer. My name is Stephan Murer. I run my own little company after having spent 25 years in banking, and before that a lot of years in academia. I retired and I only do things I like these days, and so I do a little bit of investment, a little bit of consulting, and one or the other teaching assignments at university. So that's what I'm doing today. In terms of bits, I mean, throughout my life I've dealt with bits, so I'm a hardcore computer scientist. That's what I was trained in. That's what I taught. That's what I worked with. So I've gone through terabits or whatever petabits of data, and my hips are still good despite my age.
Hi, I'm Matt Schwartz. First of all, thank you, Kaspar, and everyone else for putting this together, and thank you all for coming. Thank you for telling a story about me that was actually about someone else who's not here. But it is a true story. If you all saw the movie Mark Felt or read the Bob Woodward book, it is true that Deep Throat revealed who he was in the 70s in the context of a grand jury and a criminal investigation. It was kept secret for 40 years. My background is as a criminal prosecutor in the United States. I was with the Department of Justice for a decade. And I'm now in private practice at a law firm called Boies Schiller Flexner in New York, where I represent banks, crypto exchanges, compliance professionals, investors in principally government, regulatory, and criminal investigations. And so I'm not on the making the regulation side. I'm on the defending things when everything goes sideways side. But unfortunately, that's how a lot of the rules are being made in this space these days.
So I'm Nathan Kaiser, and I'm also a lawyer by training, and after 20 years I finally managed to get away from it. Took me a while. So I spent 2 decades in Asia, and now I'm also wearing a couple hats, and one is the chairperson of the Cardano Foundation. I'm also the general counsel to IOHK, which is the affiliated company to the Cardano protocol. And right now I'm in Boston, where I'm at the Berkman Klein Center for Internet and Society. So that's actually also part of what we talk about. Yeah. And happy to be here. Thanks again to Kaspar and thanks to the panelists. Thanks to the panelists and thanks for the audience for coming. Yeah. And by the way, we also have pretty much everybody from the Cardano Foundation, the staff, who's kind of dispersed and watching from afar, and thanks, and it's really good to have you all here. Yeah, thanks.
Applause to the Cardano Foundation. They sit on the. Who is Cardano?
Maybe stand up. We need some action, yeah.
Thank
they
you.
made this happen too, together
Thank you.
with Kaspar.
They made it happen within 4 days, basically. 4 days. The web takes years to prepare, we do it 4 days. Why waste the time? We are a blockchain. So, thank you so much for the introduction. Now it's very loud. Please come in, take a seat. That's the problem. If we do things, we don't have space. Everybody welcome. Okay, now let's start the actual panel. I would like to open with one question each panelist. Trust. Because what we are talking today here are two things, really, and I have them both in my pocket. On one hand, it's an apple. An apple. On the other hand, I was just given a gift which comes from the Puteos, the big black hole, gold. A tangible thing and an apple. Which one shall I trust more? So I would like to ask the panel, maybe starting with Stephan in the middle. Why should I trust your system? You represent the banks. Why should I trust the banks after all what they have done? I'm not talking about the good or bad things, just anything.
I'm no longer part of it, so it's not my system. So I'm being asked to defend something. I'm not sure I'm very good at defending, but nevertheless, let me give it a try. I mean, essentially, it's two things. These institutions have been around for a long time, and basically, people get used to them, and that gives them trust. It's the whole thing in the brand. Then the second part is there is laws and regulations that punish you in this field if you don't behave well, and that should create some trust as well. I'm not entirely sure whether this always works, but I would say what would work much better would be if you only have people with good business ethics, but this is probably a pipe dream of mine.
Pipe dreams. Why should we trust the system of global governance? Didn't your system let us down over the past years, leading millions of people into recessions and pain? Ugo.
So why should you trust it? I mean, it let us down, but what would have been the alternative? So things can be done better, and everything can be improved. But are you sure that without this system, the recession would not have been deeper? Are you sure that we would not have had more recessions and more crises in the past? So everybody stands ready to criticize, and I'm one among them, because institutions like the IMF, like central banks, they all make mistakes, and we all make mistakes. But the key question would be, the world be a better place without them? And we don't know, right? Because we don't observe the counterfactual, but my guess is that it would be a worse place.
Thank you. Why should we trust gold? It's heavy, it's little, it's expensive. And the moment you take it out of the Puteos, you put it back into another Puteos called the vault in a bank. Why the hell are we engaged in these things? And why should we trust something that is actually centralized? Because somebody could take it away from us.
Yeah, that's a point in terms of ownership, but I think gold's had thousands of years as a store of value, as a portfolio diversifier, as money, as a medium of exchange. It's liquid, it's recognized, and it's been challenged over those many years. And here it is today, still doing well in the face of record high stock markets, tremendous liquidity injected into the system. And I think gold is not something that's going to stop progress or stop technology, but it's going to be able to work side by side as that tried and true insurance policy.
So a tried and true insurance policy, centralized and tangible. Coming to Nathan, now you present my apple in my pocket. I can touch the apple. I don't know what's inside. I know how it works. It somehow works. I can talk to you and so on. Sometimes it crashes. Sometimes it lets me down. People steal my data. And now you claim, hey, I'm the world. This is centralized tangible stuff. Forget about that. Forget about banks. That is your statement. So I ask you, why should we trust you? I don't see it. I don't touch it. Why should it be better than something I carry in my pocket and is shining at my face?
So, well, trusting the device, Apple, is one thing. I think trusting in a cryptocurrency, which I think is the bit that you're referring to, is actually math. No, when you trust math. So once you have realized that 2 + 2 is always 4, and you trust that math, nobody can fake it. Yeah. So you trust the math.
You trust the math. You had a lot of mathematicians working on Wall Street over the previous decade, and we trusted them, and it led to a terrible mess when now Ugo has to sort it out from the global governance. Who is still trusting in the math?
Right. So I think what happens is it's always the people you don't trust, or the people mess up things, and that's where the law comes in. I think the math actually works, and the tech usually works. It's the people that really create the messes.
So trust the people that do the math.
Don't trust the people.
Don't trust the people,
Yeah.
trust the math. And who does the math?
Right, but math is verifiable. So actually that is one thing. Though. What can you verify? And you can verify gold, and I think that's a very important aspect of gold, that it's easy, more or less easy to verify whether it's real gold or not. And if it's fake, then the lawyers have a legal framework to catch you and put you in prison. And it's the same for the math. No, trust the math.
Okay, trust the math, forget the people, let the world go down. Here comes Matthew. He's our savior. He sorts out the good from the bad. Then Ugo can claim up with the global governance system. Matthew, why should we trust the system of laws? You failed us too. You let all these beautiful wizards pile up all this debt and these beautiful performances. And where did they end? In another puteos. Why should you trust the law?
So I think Nathan's exactly right. At the end of the day, there's people behind everything. And if you can't trust the people and you can't trust the systems that are in place, then the institutions are not trustworthy. You know, the law creates some incentives, usually negative incentives, right? Punishments, regulatory oversight, and that's one way to influence people's behavior. Profit motive is another way to influence people's behavior and creates efficiencies and market solutions. One of the things that's very interesting about crypto is the possibility of taking people out of the equation, which I think is sort of what Nathan is talking about. The idea that some of this math, which is objectively right or wrong, can be taken away from the mathematicians and put in the hands of the computers. I mean, just in the last month, for example, in the United States, 2 laws were introduced in Congress that were supposed to clean up this idea, which I think everyone who's in this field is sort of vaguely aware of, which is in the U.S. we have no idea what a token is. We don't know if it's money. We don't know if it's a security. We don't know if it's a commodity. We don't know if it's a contract. It depends on who you ask. Whoever has authority over that kind of thing says it's that. Congress introduced a law in the last month that would define a token as having certain requirements, and one of them is that one of the requirements is that it be tied to a decentralized, independently verifiable ledger without the involvement of people. I don't know if that works. I don't know what the IT folks and the mathematicians say about that, but the idea of taking trust and taking people out of the equation is an interesting one, because unfortunately that's where the problems always start.
So create the laws which takes the math away from the people. This is correct.
That's the proposal right now.
That's the proposal. So you're saying people are not necessary anymore. Let the computers run the math.
People are always necessary. Someone's got to create the...
Here, Stephan.
Right. So someone has to create the IT infrastructure and write the programs and the protocols and whatever it is that does the math. I mean, you know, there are always going to be people involved as long as we're part of the human race. But the idea of making this more automated and not reliant on individuals making individual decisions, but rather systemic decisions that should be motivated by broader sets of incentives, has promise, I think.
I try to follow the logic of law. I always struggle with it, but as you are my teacher, I assume it is as it is. Thank you. I would like to start with a quote, a statement of Nathan. Talk about digital currencies. Gone the banks, gone the bankers. We are building the financial system for the next 100 years. What makes you claim that you can build a system for the next 100 years if we have Sean sitting here, which has a track record of thousands of years?
Right, so we're actually, I think the people in this space are actually only adding layers to what Sean is doing. Gold is arguably the layer one on finances and value storage. And it works. I'm actually the first one to say it works. And but you can get more sophisticated. And what people have done with shells and this and that, they added additional layers, and some of the layers were preliminary layers or layers that work for 50 years or 100 years, but there may be part of them are no longer necessary because now we have a new layer that does away with some of the older layers, like the banks.
So the gold is okay, the banks are not okay.
I think the banks represent a requirement, a very practical. Of course, you have to make a difference between central bank and other banks, and there's many kind of banks.
So which one would you like to eliminate?
I think arguably when you come to payment systems and storage, value storage, there's maybe better ways than banks in the future. The jury is still out. Yeah.
So, but which one now? The central banks or the commercial banks?
The commercial banks. But again, there's investment banks too, so it gets a bit more complicated than that.
So get away with the commercial banks?
Part of the commercial banks, yeah.
Stephan,
yeah.
You end up in the streets?
I don't quite believe in that. Whilst I see the whole blockchain or distributed ledger technology as being a very interesting tool to build interesting applications, I have my doubts whether cryptocurrencies will really replace the normal fiat currencies you have in all these central bank-backed currencies. I think this is, even if technically possible, it's not going to be politically desirable, and therefore it will be regulated away to some degree. I'm very convinced, although we're now in what Gardner calls the trough of disillusionment with the technology, I'm very convinced there will be very good applications. I believe money is probably not the best application for distributed ledgers.
So forget about the money too.
No, I believe the money will stay more or less the money you have. I don't think money will change that much. You will need to have some money on these distributed ledgers as part of as a functioning contract. But I don't think that we will see digital currencies reign the world.
So Hugo is really nervous because he is being accused also of Nathan, who said get away with the bankers. First the commercial banks are gone. Now the central banks are. What to do with the central banks if the commercial banks are done?
No, I wanted to say something about commercial banks before. So commercial banks do a joint product. They do many things. They provide the payment system, which is basically a utility. But through the payment system, they get information. And this information helps them making loans. They can make good loans, they can make bad loans. But in the moment you remove the payment system role from the banks, which is through the mechanism through which banks observe the behavior of their clients and which they can gather information and which they can use to allocate resources, you lose this massive part of intermediation. Can this be substituted to the information which is collected by Google, by Facebook, by whatever? I don't know. Maybe for consumers, yes. For medium-sized enterprises, I see it as a more difficult thing.
So the nexus between, well, between the client and the central banks, basically.
Well, no, this is the nexus between the let's say, payment service activity provided by commercial banks and their lending activity, their maturity transformation. So the banks, commercial banks, do something incredibly important. They take a liquid assets which the depositor wants, and they transform it into an illiquid assets, which is what the borrower wants, and they do something magic in doing this, and they can do it thanks to the central bank, because if not, you would have bank runs, so you need to have a central bank, which is, a lender of last resort that prevents bank runs. And in fact, since we had effective lender of last resort, we almost never observe bank runs in countries which there is a credible lender of last resort. The exception was, was in England, what was called Rock, whatever, not BlackRock, what was called and it was a bank run in 2007 in the UK, because basically the bank,
Bearings?
No. Northern Rock.
Yeah, sure.
Basically, because Bank of England was titubanted, said, we're going to guarantee deposit, we're not going to guarantee it, we're going to guarantee it, not guaranteed, and then people start piling in front of the banks. And when Bank of England said we're going to guarantee deposits, the bank run ended.
So it was not really rock solid, the whole story. So here we go. Sean, he's very nervous. So he's the third one on the line here. Nathan attacked the whole range, but you're the first layer. He still likes you.
That's good.
That's good.
I think the beauty of the first layer and why it's maintained itself for thousands of years is its simplicity and lack of complexity. All these other things we're talking about introduce layers and layers of complexity to something that's very simple as the sort of standard money for thousands of years. And once you start introducing complexity, you begin to have trust issues, because again, you have people. The complexity around gold is the mining. It's to find it. It's tough to find. It's tough to mine. It's tough to get these things permitted. It's extremely expensive to get them built. As we find these things, they're in remote parts of the world that a lot of people don't even want to go to. So we've got this issue around, even if gold was to go up, the industry can't flood the market with more supply. So that's the simplicity of it. And it's not to say that the gold mining industry hasn't had its trust issues from the mining context. Why? Because you have people. They're selling hope on deposits that haven't materialized. The same with some of these other things. It all comes down to people. So I agree that it's the foundation, but as a society, it's getting more complex. Technology's here to stay. Technology's going to improve all of our lives. We just have to understand it before we can trust it.
So you reduce complexity into simplicity backed by gold.
That's
by
right.
going to deep, dark holes.
Deep, dark hole, and we're down one of the deepest and darkest in the world.
Which is how
in
much?
Quebec, where you have that gold. That
Right.
gold in your hand is from a mine that's currently mining at 3.1 kilometers underground. 1 kilometers underground.
3.1 kilometers.
Underground.
What is the length of Davos? That's about. It's more. So that would be the next year. So you go a little bit deeper.
We're going to 3.5, and we've traced the deposit below 3.5.
So soon.
So it tells you how complex and difficult it is to keep finding gold in economic quantities. The one thing is the average gold grade in the world's mines has declined dramatically over the last 20 years. So
Gold grade means?
Content of gold in the ore. The average for the North American companies is 1 gram per ton of rock.
So you have to move 1 ton of rock to get this.
The Osisko mine that Sean
Very
Rusin
low.
built, that we now own, on a daily basis, they move 250,000 tons of rock per day. And of that 250,000 tons, there's 55,000 tons of rock that contains 1 gram of gold per ton.
Now this I want to shoot back right to the other side on the left side, Nathan. They claim they can reduce complexity to simplicity by going down the ground. Now you claim, well, we decentralize the whole thing, and we have our mines too, after all, and they're distributed, and they're very simple operations, really, solving all these mathematical puzzles. And there is one issue, which is in terms of energy consumption.
I I think I'm going to skip that one because that was just a bump, a historical bump in the road of cryptocurrencies.
I'll take that one.
Yeah.
I take it.
Only
Yeah.
because in Quebec, our cost per kilowatt hour is 5 cents. So it's one of the cheapest jurisdictions in North America. We've been asked so many times over the last several years, don't you have a number of empty warehouses or buildings on your mine sites? So while you're mining gold, maybe we can mine Bitcoin.
So you have both down the shaft.
That's what they tried. Yeah, that's what they tried to do. It's not going to work.
That's great. Two
We're
in
too
one
busy
hole.
mining
That
gold.
is great. Thank you so much. Moving one step further in our conversation, I would like to address the things of tangibility. Tangibility, I like to touch the gold in my pocket. I just don't care so much. But still, in order that we can be safe and sleep sound, that our assets, our valuables are safely stored, it's not so easy. We are very privileged in Switzerland. People do, what they say they do, mostly. In other countries, a little bit less. In other countries, go down the drain. Some go up and down. But what is it and why should the assets of the individuals or corporations be safe in your system? And maybe I start with Ugo.
What I don't understand.
Why, if you craft the global governance
Yes.
in a way that should provide the financial stability to their economies, why would you say that your system provides the stability and safety of assets across the board because of you?
Because of me.
Yeah, of course.
Well, nobody would think that I provide stability. Everybody would run away if I run a central bank. No. But I'm not sure I understand your question. But so why should a central bank provide stability? Is that your question?
No, safety of assets.
Okay.
Because a lot of the talk is, that our assets are much safer in a distributed way network. If
Okay.
one goes down, the other one can basically keep it up. But central banks and, kind of global governance is pretty central. So some say central is old, it's not safe because you can hijack it after all.
Okay. So I mean, if you live in a country like this one, where the government, the central bank, the institutions are credible, I feel safe. I mean, I keep all my savings in traditional, whatever, in banks and assets and stocks, and I feel that I'm pretty safe. If I were to live in a country like Venezuela, then of course I would not trust the government. We trust the future government with a new president that was appointed, well, self-proclaimed yesterday, but not under the past government. And in that case, I would try to escape the system, the national governance.
The national governance.
Yeah.
Now, 2009, we had an interesting event. I would like to address this question to Matthew. Assets were in banks. Banks went down. I couldn't get my assets back, despite having these banks being located in OECD countries. Why did you fail? Why did the law fail to protect my assets in banks, even though the law provides for the safety of my assets? And you were like in the maelstrom right in the middle in Manhattan at the time.
In that situation, though, at least you have not only a legal and a regulatory framework, but you also know who to complain to. You know who has your money, right? One of the issues from a governance perspective that you have to deal with decentralized ledgers and cryptocurrency is there's no one in charge, right? There's no one to complain to. And so this governance system, how does it work? And ultimately, who's accountable, right? The blockchain and distributed ledger technology is incredibly valuable to verify what transactions have taken place and ensure that there's not false transactions and people interfering with those sorts of footprints. But in terms of accountability, who's accountable in that situation?
I would like to ask you a question. You had once a case which was extremely complicated. It built up over decades and led to a big decay in 2000 8 in December. The assets were distributed across the world. You were tasked with finding those assets across different jurisdictions. I would like to ask you, how did the rule of law provide, despite this complexity in today's world, in the extreme sort of turmoil, a way that you could find quite a substantial amount, which was perceived as lost, I guess, at the time? And how much could you get back of the thing that was built up over decades?
Sure. So what Kaspar is referring to is Bernie Madoff, who you all may be familiar with. So Bernard Madoff ran a multi-billion-dollar Ponzi scheme that lasted for 40 years, and I was one of the prosecutors who was in charge of investigating and prosecuting the people that were responsible for that fraud, but also for recovering some of the money that had disappeared. And as in any Ponzi scheme, billions of dollars had been taken in and then had been redistributed throughout the world, and sometimes through layers of intermediaries all over the place. And so how did we go about finding that money? Because it was distributed through traditional banking channels, we could take advantage of the record-keeping requirements and the correspondent banking system and the assistance of regulators throughout the world to trace the money. And so we were able to determine where a lot of it had gone, the money that wasn't just spent and consumed at high-end restaurants or buying Super Bowl tickets. And then we were able to use legal tools to recover that money. And as a result, recovered in excess of $15 billion and was able to distribute that back to the people who had lost the money. Doesn't make them whole, but an enormous and successful effort.
Out of how much?
Depends how you count, but maybe 20 billion.
So that's 3/4 was recuperated. Yeah?
Yeah, 3/4 of out-of-pocket losses. Now, people thought that they had many billions of dollars more in value because they were receiving statements and thought that they had millions when in fact, they only had what they actually put in. But in terms of actual losses, 3/4, which is unprecedented in schemes like that.
I would like to offer an applause to that, because that is the proof that the rule of law across the entire world is an instrument which works. And it works in collaboration with the central banks, which are central, to trace assets. Now, Nathan doesn't like that statement, of course. He's an attorney because he likes to do some more work. But you claim something around blockchain, I assume.
But
please.
By the way, the same thing is now happening with cryptocurrencies
Oh.
and blockchains, right?
Oh.
Because that is the new flavor of the day in Ponzi schemes, and that is the way that money is being recovered now, not on the same scale of Bernie Madoff, but the exact same idea. So it's not unique to...
So it's just shifting.
Very much so.
So
Yes.
with the centralized or decentralized,
different tools to trace the money, but the same ability to enforce, the same recourse to the courts, as long as you know who to sue. What we were able to do in the case of Bernie Madoff that we could not do in a cryptocurrency case is also hold the banks responsible that had facilitated these transactions. So in the case of Madoff, we prosecuted JP Morgan, which was his bank, and they paid billions of dollars and agreed to a deferred prosecution agreement and reforms, and took responsibility for unwittingly facilitating that fraud. That's not something that can be done in the same way, maybe with exchanges, but not really in the same way in the crypto world.
Nathan?
Well, I think, right. We all agree that the system works for about 2 or 3 billion banked people. So the Davos man and the Davos woman or the New York investor, because it was a New York thing, I think, largely, wasn't it? Or he went further than that. So it worked for all those people. And the system works and the law works and the institutions work. But they really didn't work in Venezuela, as Ugo says. And they don't work for all these people who don't even have a bank account. And I think I'm kind of steering the discussion here, Kaspar. I hope you're not angry with me. But what happens is we all know we need rules. And I'm the first one to agree. We need KYC. We need all these rules. AML, and for many very legitimate reasons. But what that leads to is that a very large percentage of the world's population actually cannot get a bank account, either because of the rules of lack of identity documents and so on and so on. So does the system work for about 3-4 billion people? No, actually it doesn't. No, the law doesn't work. The institutions don't work. The money under the bank mattress is also a very bad idea. So nothing works. No, it's completely broken except for us in this room. So what do we do? Where's the solution? There's no solution offered from the fiat side. Maybe gold kind of works because it's small enough to really hide. So the layer one, at least the layer one works for these 3 billion people. But because they have so little money, they don't need, it would be that much gold.
Okay, financial technologies enable to onboard non-banked individuals across the world. I tell you quite some numbers, and that is in the little report I put together. Has progress been made regarding financial inclusion? Yes. 700 million more people could open an account over the past 5 years. 62% of the world's adult population has an account today. That's up from 51% in 2011. Is it because of the cyber currencies or despite?
I think that's actually independent. So there's a bit more institutions and all that, but the increase of regulations will actually make it increasingly difficult for many people to open bank accounts. That's my guess.
That's it. Okay, perfect. I would like to ask one last question to Stephan, actually. You wanted to respond something to that conversation, and then one last.
I think I wanted to do that because I think indeed that distributed ledger technology is very, very important in an area where you don't have trust in institutions. So nobody would think, for example, of having a property register on blockchain in Switzerland. However, I saw a case where somebody built something exactly that for Kenya, where it's supposedly, I've never tried it, but it's easier to go to your property registry office and move a bit of your land to another person. And I think there something like an unpersonalized, independent trust provider is very important. You see also another application you see in many cases is international money remittance in areas where the systems don't work that well. So I think that is indeed one of the areas where I personally believe that has an impact. Less money related, but trust related very much so.
Thank you. Keep one. I would like to ask one last question. Then we summarize and we go to debate. You have been in the bank during the big financial crisis. With today's technologies, do you think, as a bank, you could address those extreme market disruptions? You could address them and make them better or less pronounced, as particularly UBS, as we know.
To be honest, of course, we've spent billions on surveillance technology and basically watching every move of everybody. To be very honest, it could happen again. I mean, I don't think the technology is the solution here. To some degree, the technology is even increasing the speed of such a crisis because trading goes much faster. It's much more automated. There is automatic reaction, even unintended reaction to market movements and so on. I don't think, although everybody spent a lot of money on regulatory technology, it was often more done in the spirit of we've done what we were asked to do, rather than we've done it because we truly believe it won't happen again. I think ultimately the secret of not happening again is in the business ethics of the actors and not in the technology that basically put surveillance over people. You could even have, I think you could even have counter effects, because everybody thinks everybody thinks I'm perfectly monitored, and everybody starts to find holes and thinks it's even legitimate to find holes because everything I'm not caught with is okay to do. So I'm very reluctant. I'm much more on principles and ethics than rules and technology in terms of regulation.
Thank you. Ugo, and then
just one small comment. I don't think that we should think that our ultimate objective is zero crisis. So if I ask you, you're the guy who's regulating highways, and my ultimate objective is of zero car accidents. Well, I know what's the solution. So you put the speed limit at 0 km/h, and you'll have 0 accidents, and and that's fine, and you've reached your objective. Is this an efficient situation? Clearly not, because then nobody would be here, nobody would go skiing, nobody would do anything. So the objective should be to minimize accident, to do our best, to put seatbelt, to put better brakes, to put some regulation. But then at the end, in the moment you do regulation, you have a trade-off with taking some risk and achieving the objective that you want to achieve. So I'm a bit resistant to this thing, there was an accident, so we have to rethink completely. Of course, we want to decrease the likelihood of accidents, but we'll never get zero crisis solution.
And I agree with that. Asset values go up and down. You want them to go up and down. What you don't want is when they're going up and down at the same time, mostly down, that you create follow-on systemic risk. And is technology going to help us avoid it? Not sure. But I think what technology is doing is creating more complex products, more complex derivatives. If you look at asset concentration, it's way more concentrated than it was 10 years ago or 12 years ago in terms of the total percentage of assets held by the top 10 institutions. You've got a stock market that was at record highs. So you've created these conditions where, gold is sort of that just in case. You have it because you want it to protect your portfolio against the standard and normal ups and downs, but you really have it just in case the whole thing blows up. You don't want it to happen, but it's always going to be there as that ultimate protection.
Well, thank you so much. I tried to summarize briefly what I heard through the lines, and maybe starting with Stephan, that the blockchain holds promises in different applications, but you have to be aware of pipe dreams. While Ugo lets the market do mistakes, but put better brakes along the way. From the gold side, we have the quintessential mean to reduce the world of complexities into a solid, shiny piece of trust. And from the Matthew, trust the law to take the math away from the people. While Nathan says, trust the math and forget the people. Thank you so much for this panel. We go into debate. Please take a seat. Please take a seat. Now it gets interesting.
Give this to the wife. Mandy? Sorry.
Please take a seat. Okay, sit down. The panel, the debaters are ready. Psst, you two blonde, the two Bohemian chicks. Come. Entree. Honestly, class. All the Dutch, all the San Francisco. Look here, all the. Come, take a seat. Anyway. Okay, let's start. So, ready for the debate? Take a seat. Cardano over there. Come. Florine. Come. You stay there. Okay, good. Okay, let's start the debate. Debate is Oxford style. What does that mean, Oxford style? We have a question, you vote at the beginning. and we count the votes. And then debaters have to try to convince you to one or the other side. At the end, there is a closing vote, and we see whether they could convince you to one or the other side. We have the peak debate gladiators on stage. They represent two worlds, the old world and the new world. The old world sitting on the left side, representing gold, which is old, and the bits on the right side, which presents the future, the uncertainty. And in the middle, we have central banks. They're in the center in between. They're a little bit undecided. They try to make things work. So the question is, who thinks that gold is old and belongs into the dustbin of historical provider of financial stability? Raise your hands. 1, 2. That's it. Only 2 things. 3. That cannot be. Only 3 things that gold is old. In the back there? Oh, there are a lot of gold bags here. Oh, here we have some more. 5. So 5 out of how many? Raj, count. How many are we here? 5 probably represents whatever. 10%. 10%. Let's say 10%. Okay, 10% believes that gold is old, belongs to the dustbin of history. Wow. Now that's a challenge for the right side over here. The rules of the debate are as follows. Statements are short and they end with an exclamation mark. The questions end with a question mark, and they are short too. Everything is allowed except personal attack or physical attack. So I would like to welcome the peak debaters, called the gladiators, representing the 2 extremes. And I would like to invite, from left to right, to make a short statement why gold is not old. Matthew, Sean, and Hugo is not decided yet, but, oh, please, I mean, Mike.
This works, right? So I think the vote speaks for itself. No one really wants to get rid of gold as a fundamental store of value. The question is, what opportunity or what reality does crypto have to supplement or replace it going forward? And I think the answer is that the more established crypto becomes and the more regulated it becomes, some of the things that currently are its biggest advantages are going to erode. And so I guess my question to the other side is, what does the future really look like for crypto? You talked about access to the unbanked, for example. But as crypto exchanges fall under the same KYC and AML regulations as the biggest banks in the world, the same people who couldn't get an account at the big bank are not going to be able to get an account at the crypto exchange. So what's the future?
What's the future? Sean?
I would also ask, and this goes to the central bank equation, central banks have been increasing their positions in gold over the last few years. We do a lot of investor meetings with pension plans, particularly U.S. state pension plans, generally very conservative money. They're increasing their exposure to gold. So something that's actually being bought by central banks that actually control the money supply can't be old. So will we get to the point where central banks are actually buying cryptocurrencies the way they're currently buying gold to diversify their reserve base?
Thank you. Ugo, on which sense do you stand? Now you have to disclose.
I stand, I don't stand, you know, I'm an economist. Economists are always two-handed, right?
Your statement is?
My statement is that this is a false dichotomy. So there is gold, there is bit, and there is fiat currency, which is, you know, what it still dominates in the world in most countries. And I think that fiat currency is here to stay, and will stay for a very long time. In advanced economies, it worked very well. You know, there are problems, but it worked very well. In other countries, it didn't work in Zimbabwe, it didn't work in Venezuela, but, you know, I'm very happy on Switzerland and the US and Europe staying on fiat currency.
Fiat works. Fiat. Nathan, now we...
Not the car, eh?
Huh?
Not the car.
Not the car.
The car too, the car too.
Okay, now we cross the big divide. Nathan. Now we have a big deal to do. Only 10% are believing in you, eh?
It's actually fairly simple. If I were to ask who has a phone here, it'd be 100% who would raise their hands. If I were to ask who controls his or her phone, it'd be 100% again. If I were to ask who is going to take his or her phone over the border or home or to the office or to vacation, it'd be another 100%. If I were to ask who holds gold, maybe a couple of them. Where is it? Is it at home? Easy to be stolen? In a bank? Then you don't have... Right,
Holding the gold.
I kind of expected that, I have to say that, yeah. And then what happens is that if you go across the border, the gold will show up on the screen. So it's very hard to take that across the border if the authorities don't want you to. So gold doesn't work. No, it doesn't work for any of you. And your phone and the bits, they work for you every single minute when you watch your screen. They work at home, at the office, on vacation. You're in full control.
Okay, forget the gold, trust the bits.
Okay, here. In my view, we will stay with fiat currencies. I think there's no alternative to it. I don't think it should be gold-backed because gold is very limited in supply. Fiat currency has to grow in supply, so that's not a particularly good idea. Fiat currency will be more and more digitized, so I think also banknotes will over time disappear. And I think cryptographic tokens are one form of fiat currency in the future because you may need it in certain transactions that sit on top of digital distributed ledgers. However, I don't think we will have independent digital currencies.
Challenged. Matthew, you raise your hands. You're being challenged. Forget the gold, but fiat will prevail.
Well, maybe, but when you're talking about a centrally issued so-called cryptocurrency, we're not really talking about what most of us in this room think of as a cryptocurrency. I mean, to say you trust your phone and the money in your electronic bank account is very different from trusting the bit in the way that we're talking about today, right? Some form of automated payment has existed, I think, since Western Union was created in the 1870s. That's not the same as the bit, right? The fact that you don't have banknotes or gold coins in your pocket, unless you're Sean, is not the same thing as trusting the bit. And so I still haven't heard an answer to my question, which is what is the future of the cryptocurrency that you guys are defending?
I formally apologize, but I did think of it. So let me give you the answer exactly. So basically, the let's call them 3 billion unbanked ones are exactly the ones where there are no institutions or no laws that can be trusted. And so the exchanges there actually will also not work, or they will work without the AMC and KYC, AML and KYC. So the cryptocurrencies will actually work for those 3 billion people. Yeah. But the banks won't, no. So that's the answer.
But is that a good thing to have?
Right. I think that's a fantastic question. Yeah, absolutely. Is it a good thing? I think it's a bad thing that we as a world community are not able to ensure functioning legal systems and institutions for 3 billion people. That really sucks. But that the single person's needs can be addressed through cryptocurrency, that's pretty cool. That's a good thing.
Yeah, I think crypto's the door open for crypto because of the issues around fiat currency. As you said, it's not perfect. When the U.S. went off the gold standard, what happened to the money supply? So that's always going to be an issue, is control of money supply. And we're at this point now where the levels of debt in the world are just massive. And that's an issue. And I think one of the things about crypto is they say it's finite. Is that true? You can create a crypto at any point, at any time. And I think that's one of the issues. There are cryptos out there that the only thing that those cryptos are mining, they're mining the public. They're not mining for Bitcoin.
Okay, let me put another point here on why I believe crypto is important. Still bound to fiat currency, as I said before. I think there is a desire for financial privacy, which currently cash is covering. And I think all the other digital means of payments and digital means of value transfers don't really cover. I think there is a desire, sometimes for good reasons, sometimes for not so good reasons, for for real cash, and I think we will need some form of electronic cash, and I think cryptocurrencies can do that for you. They have to be stable, however. That's why they have to be bound to a fiat currency. But I think there is a good reason for them to be there for financial privacy. I think people will ask for that. Not only criminals will ask for that. I mean, there are theories that Bitcoin went up in value so quickly because people were exporting money from China, but they couldn't do over their bank account. So there are reasons why this should exist.
Ugo.
So I want to challenge the idea that crypto is going to bank the 3 billion people who are unbanked. So in order to make this statement, I need to know why these people are unbanked. So let me tell you about one person that I knew well, she's dead, who was unbanked. And she's also the best investor I ever met in my life, my grandmother. So my grandmother didn't trust banks. She refused throughout her life, she died 15 years ago, she refused throughout her life to open a bank account because somebody told her that, before she was born, somebody had money in a bank and the bank went bust and this person lost the money. So she would only buy postal bonds, which I inherited. So now I have these postal bonds, and that's I tell you why she's the best investor I ever met. So I have these postal bonds, which are basically government bonds, which are liquid, I can cash them any moment, and they pay me 15%. So imagine having an asset in euro guaranteed by a government. It is not a very credible government like the Italian government. It pays you 15% and it's liquid and you can cash it in any moment, right? So that's why I say that she was. But she didn't open this, not because she didn't trust the banks. So a friend of mine is doing research in India, and she's trying to understand why people are unbanked, and she's making payment to people. Some people is giving them cash, some people is opening them a bank account, and when they learn how to use the bank account, they keep having the bank account, so they don't need the crypto. So the question, are these people like my grandmother, who don't trust a bank with a building, where his daughter and his grandson, who has a PhD in economics, tell her, you should trust it, would they trust a cryptocurrency? That's my question.
Sean was before you had some problem. Oh, I'm sorry. Okay.
So let me also challenge the same premise that crypto is the answer to the unbanked from a different direction, right? So in your example, Nathan, because there's not a strong rule of law in countries where there are great numbers of unbanked, then the exchanges will also be ungoverned, and so those people will be able to get access to crypto. All right, but here's what happens in a few years. Me in New York go to a US regulated crypto exchange, and I want to remit money to family members in some part of the world where it's hard to be banked. Right? Even though they may not have regulations down there, my exchange is regulated by the United States and won't allow me to transfer that money to the foreign exchange unless they've complied with US regulations. Because the United States, as we all know, always becomes the global regulator through force, right? And that's exactly what's going to happen in crypto. And so everyone is going to have to either cease doing business with the United States, which happens, some exchanges are moving entirely offshore, or they're going to have to conform to international norms about KYC, AML. So in 15 years, what's it going to look like?
And I would add another point to that, because also in 15 years, is the US dollar still the world's reserve currency? If it isn't, is that open up room for other forms of money? And so we're entering into sort of uncharted waters, given where the world's headed and the ascension of other sort of superpowers that are contesting the supremacy of the US dollar as a form of payment for settling major transactions. So, does that open up the space for a crypto?
I'm going to cheat and take Sean's words, uncharted water, to respond to Matthew. I think the friction between these, let's say, US-led international order and then the ones that don't follow it because they either can't or they don't want to, that's going to be super interesting. And how that's going to develop, I think that's truly uncharted waters.
You have to defend the digital world here. That's not an
So-
opinion
so
thing.
actually
Why
the-
should you have only 10% in the audience?
The
What-
easy answer is that gold as a layer one managed to remain, unregulated in the sense it is still easy to transfer gold without declaring anything because it works. No, so gold remains a functioning layer one outside of the banking system anywhere, and
Who
despite
are
the
you
US-led
defending?
global order.
Are you
And
betraying your
and
digital world?
Right. So actually, crypto will do exactly the same thing. No. So
So
actually,
forget you can do what
they
they
both
do.
work the same way.
Ah.
But the crypto will work better than the gold because the African or from Ethiopia there was somebody, they can't really do much with gold because it's not easy to trade, but they'll have a phone.
So-
and
so
they're
let-
going to use that phone. Yeah.
So forget the gold in Africa and go digital there.
Go
Yeah, perfect.
digital,
Okay,
full
forget
speed.
the whole thing. Right,
full
John.
speed.
Here-
Yeah.
Gold's proven, crypto's still got to prove itself. And that's the point.
Absolutely. With you.
Okay, Stefan. One last thing, one
reason-
last round.
Another reason why we need a little bit of cryptocurrency, still fiat backed, is we will. I'm totally convinced we will see a lot of digital contracts, self-fulfilling digital contracts, and unique currency in that system because every contract has money flowing somewhere. So at least for that function, I think we need crypto. That's quite clear to me. So you see, I believe we will need crypto for all the transactional elegance and privacy and whatever we have. I don't necessarily think gold isn't particularly elegant in transactions, so it's heavy, it's hard to protect and what have you. And I don't really think we really need it to create the fiat currencies. That I don't think.
No,
So
I'm
the
not gonna
transactional elegance. Now, John, you have to defend your elegance because they don't believe in the gold as being elegant.
No, it's not elegant, but I'm going to give this away in a minute and watch
Here we
how
go.
everybody jumps and puts their hands up. But
He can give some bitcoins for free from Cardano coins. Sorry, John. Yeah. Okay, so you are offering today.
yeah, so this is gold from our LaRonde mine in Quebec. So I want to see who was actually paying attention at the start. What year did Agnico Eagle start? When did we begin our life as a public company traded on the Toronto Stock Exchange? I mentioned it at the start.
Okay, here we
What
have
time?
what? 51?
No,
51.
61, but it
61?
doesn't count. Andre, no, he doesn't. Andre can't.
You guys were cheating here.
Someone said
We need to
61
put-
back there.
on the
Okay.
other blockchain.
Right there. Yeah, you said 61 first. So here's some gold. You want it?
Hayal,
You know,
come,
now
welcome
I
Hayal.
don't know if he wants it. Did he vote
Now,
for Bitcoin?
I certainly think he wants it. Now, Hayal, come to the front. Come quickly to the front. Now, here we have something really,
Now-
really interesting. Hayal, tell me very briefly the story
Eighth of
of
an
your
ounce.
family. You will be very surprised. Today we think about global citizenship. Well, tell where you are originally from, but for a couple of 100 years went around the world and came back to where you're originally from.
Hi, this is a bit embarrassing for Little Gold. Okay. My name is Hayal Sinokrot. So Sinokrot is, I'm born in Saudi Arabia. My dad was born in Hebron. Ironically, Sinokrot family is originated from Saint Croix, which is a town near Yverdon in Switzerland. So a few hundred years ago, they migrated to Palestine then for pilgrim. And yeah, they did trade pilgrim, and now I'm back to Switzerland. I'm still not Swiss, but yeah.
So something else about Saint Croix. It's above Yverdon. It's also the first location where skiing was invented. The first ski was Saint Croix from Saint Moritz or Davos. So then you had enough of the thing. You go to the desert in Saudi Arabia, Palestine, as a pilgrim, had enough of the sunshine back in Davos. And he gets the gold. Well, how about that?
Can I add one more?
It's Habibi style. We
That's
may.
Habibi style.
Just one more point on cryptocurrency. And this is a hope. This is a hope. We've got a lot of countries in the world working in different directions now. Does crypto give us the opportunity to sort of move together in terms of sort of, not just financially, but the way we sort of work together on trade and that sort of aspect? That would be interesting to see if we get there 10 or 15 years from now.
So there's the hope of collaboration and creating the nexus between the old and the new. Well, thank you so much. But we come to the last vote. Were you able, the right side, to convince this 10% to move up a little bit higher? Let's see. Who thinks that gold is old and belongs to the dustbin of history after having heard all the beautiful arguments from Stephan, Nathan? Please hold up your hand. 1, 2, 3, 4, 5, 6, 7, 8, 9. Wow, that's not bad, eh? We moved up. It's doubled. It's 100% return on the Bitcoin. Well, that's not bad. Well, I would like to offer heartfelt congratulations and applaud to the unbelievable panelists that came here from far away. Thank you so much.